There, now you can hear me. All right, so the extra cost of down payment assistance. Some things you need to know, two in particular, when it comes to extra cost of down payment assistance. One being the interest rate cost, because there is an increased interest rate cost when we're talking about down payment assistance. And then the other one being increased closing costs as well. So these are the two big things that you really want to be on the lookout for when it comes to down payment assistance, is that interest rates are not something that you can always control. A lot of times, the entity that is providing you with the down payment assistance money will often set what the interest rate is, or they will give you the options that you have to select from in terms of interest rates. So that's not always something that you can control, and that's something you definitely want to be aware of as well, is that you might not have those same lower interest rates that you might have access to if you were doing a traditional FHA loan under which you were covering your own down payment and not using down payment assistance. And the closing costs are more expensive due to broker fees. And so we're going to get into a little bit of explaining what broker fees are and what you have to look forward to in terms of the increased cost with closing costs when it comes to down payment assistance. So broker fees, how they work. This is you, and you are looking at purchasing a home. So you want to go to a lender, and lender A says, yep, we would love to finance you for that home. And you let the lender know you would like to get some down payment assistance money because you don't have all the money to be able to cover the down payment and closing costs. So lender A says, yep, I can help you with that. Now, lender A doesn't actually have down payment assistance money. What lender A has is a relationship with lender B. Lender B actually does have the down payment assistance money that you're looking for. So all the funds that you're going to get for closing are actually going to come from lender B. However, you're working through lender A, who has now become the middleman, so to speak, for this real estate transaction in terms of helping you get the financing to purchase this home. So lender B is giving you the funds. Now, since everything's coming from lender B, lender A, being the middleman, still wants to get paid on this transaction. And so lender A gets paid via what's called a broker fee. So lender A tacks on a broker fee to this entire transaction, and that's what's increasing the cost of this entire loan. That's where those increased closing costs come from, is that now you've got this third party or this extra party that's involved in this transaction, and that middleman, so to speak, lender A, the one you originally reached out to, wants to have some wants to get compensated for the work that they're putting in. And so that is the broker fee, is their compensation for that. Now you might be thinking, well, why don't I just go straight to lender B? Why go to lender A at all? I can cut out the middleman and save the upfront cost of that broker fee that I'm gonna have to pay just to close on this loan. Well, that might not always be an option. And the reason is because oftentimes lender B is what we call a wholesale lender. And a lot of times some of these wholesale lenders don't operate directly with consumers such as you to offer products for financing. So for example, lender B has down payment assistance products, but lender B might not work directly with consumers. They might just work only with other lenders who work directly with consumers. So a lot of times the only way to get that down payment assistance is to go through a third party lender in order to make that happen. So that's something that you definitely want to keep in mind as well, is that you've got, these lenders that are kind of all working together, but you might not be able to just cut out the middleman and go directly to the lender that you're wanting to go to, because it might not even be an option if you want to utilize that down payment assistance money. So getting back into it, what are your remedies for these increased costs that we're going to have? Well, one is you can get more down payment assistance. And what I mean by that is there are many down payment assistance programs that offer more than one option. You have some down payment assistance programs that offer a 3.5% down payment option. And I'll pause right there and just say most down payment assistance is going to fall under an FHA loan. So FHA, the minimum required down payment for an FHA loan is 3.5%. And that's for any FHA loan for which your credit score is at least a 580 or higher. 3.5% is the minimum down payment required. So most down payment assistance programs are for FHA loans. And when you're getting a down payment assistance program or are getting down payment assistance funds, a lot of times they will offer you a 3.5% option, which means you have the option to get the funds needed just to cover the down payment portion, which is at 3.5%. Now you have some down payment assistance programs that also offer just a set, standard rate. Maybe they're offering 10,000, maybe 15,000, maybe 20,000, but you have a lot out there that are also offering it based on a percent. And that percent oftentimes is 3.5%. Well, some of those that offer it based on a percent also offer down payment assistance with two different options. They'll have the 3.5%, which just covers your down payment, but they're also going to have the 5% option. And the 5% option gives you an extra 1.5% to cover some of that closing cost that you're going to have as well. And those closing costs are going to be increased fees that you're going to want to be able to have the funds there to take care of. So keep in mind, those are two different options, and having that option to help cover those increased closing costs is going to be hugely beneficial to you as well. And we're going to get a little bit more into that. Seller contributions is the huge remedy that I like to use in terms of helping to cover the cost of these increased closing costs when it comes to down payment assistance. And so seller contributions are really going to be key in helping to keep your costs down. When you go to use down payment assistance money, if you don't have seller contributions, you're actually not saving as much money as most people think they are by utilizing down payment assistance to pay for a home. Now, I'm going to explain a little bit about what that looks like. So, in general, like we stated earlier, when you're utilizing down payment assistance, there are broker fees associated with that down payment assistance. Oftentimes, those broker fees are in the range of 1.5% to 2.5% of the loan amount. So what does that look like? That means that for a $300,000 home, you'd be paying somewhere in the range of $4,500 to $7,500 in broker fees. Now, 2% is what a lot of lenders tend to charge, but again, there's not a set amount. It kind of depends upon the loan program, depends upon the lender, because lenders charge different amounts as well. However, 2%, that would be $6,000 of this $300,000 home. If it's a $400,000 home, you're going to be paying somewhere between the range of $6,000 and $10,000 in broker fees if it's in that 1.5% to 2.5% range. Keep in mind, this is on top of your closing costs. So you've got your down payment that you're getting the down payment assistance money for, but then you also have your closing costs, which is your origination fees, your attorney fees, the title fees, and any discount points that you might have to pay for your interest rate. On top of that is the broker fee. So this is in addition to all of that. And that's why I say you could end up getting, $10,000 in down payment assistance. But then if you're buying a $400,000 home and that lender is charging 2% of the loan amount in a broker fee, now your $8,000 is additional money that's going to be going to the lender. So you're really only getting $2,000 that is helping you. So that's one of the reasons why I said in the previous screen, having seller contributions is helpful, but also getting more down payment assistance, meaning that if there's a 3.5% option and a 5% option, look at potentially taking that 5% option, because that could get you more money that you might end up needing to help cover that increase in the closing cost when it comes to utilizing down payment assistance. Also, we'll click back over to this other screen. When it comes to the 3.5% and the 5% option, you do want to keep in mind that typically a 5% option is going to come with a higher interest rate than a 3.5% option. So if you've got those two options where it's like, okay, well, I'll just take the more money option, that's going to help you out in terms of being able to purchase the home and not have to spend as much of your own money in order to pay all those closing costs. But your interest rate might be a little bit higher because you are now taking that 5% option, which in most cases does come with an increase in your interest rate that you're going to have for your loan. So moving on from there, how can you buy a home with no money down? So there's a couple of different ways. Get as much DPA as you can. Like we said, DPA is down payment assistance. So get as much down payment assistance as you can. Again, getting that 5% option versus that 3%. Or you have some options out there, like I said, there are a flat fee, but that flat fee might be pretty high. For example, you might have a flat fee that is at $15,000 or $20,000, and that could be a good amount to cover most of what your total down payment and closing costs would be. And so utilizing that along with seller contributions is going to help you be able to purchase a home without having to put any money down. Now, there are a couple of different ways that you can also purchase with no money down, but this is one of the more common ways, is someone utilizing down payment assistance, and then on top of that, combining it with seller contributions as well. Now, some cases the seller's not willing to contribute to you being able to purchase a home. Maybe the seller's like, nope, I'm not contributing any money. Maybe it's a multiple offer situation and you didn't really have the wiggle room to negotiate for the seller to be able to contribute toward closing costs. So in those instances, one thing that you might be able to do is to ask for an increase in the purchase price. You can modify the contract so that, let's say, for example, if you're going to purchase a home for $300,000, instead of purchasing that home for $300,000, if you needed an extra $10,000 from the seller, purchase that home for $310,000. The seller is still going to net the same amount, but now you're purchasing the home for $10,000 more, and you're having the seller give that $10,000 back to you in the form of seller contributions. So now you can put that money toward paying your closing costs or assisting with your well, really, it's going to be with your closing costs that the seller's paying for, because the seller cannot pay for your down payment, but the seller can contribute to your closing costs. So the down payment assistance is going to be covering your down payment, but the money that you get from the seller is going to help cover your closing costs, the increased fees, the origination fees, the attorney fees, the title fees, all of that stuff, even the insurance and taxes and everything. The seller can help cover those things as well. So that's something that you want to keep in mind, is increasing that closing cost. Now, if you do increase the closing cost, one thing that you really want to make sure of is that, one, there's enough wiggle room in there for you to be able to increase those closing costs. FHA puts limits on how much the seller can contribute to you being able to purchase a home. And so the FHA limit is 6%. So any more than 6% of the purchase price of the home, the seller can't contribute any more of that in terms of helping you be able to, purchase a home and everything. So 6% could be a lot. It could be a little, but whatever that price home is, multiply that by 6%. That's the max that FHA will allow the seller to contribute to helping you purchase a home. But the other thing that you really want to make sure of is that when the seller is contributing to these closing costs and everything, if you're increasing the purchase price of the home to allow for the seller to thereby give you the money back to put toward closing costs, the home still needs to appraise for the amount that you're increasing it. For example, you're purchasing a $300,000 home, and obviously that home would need to appraise for $300,000 in order for the lender to finance you purchasing that home. Well, if you increase the price to $310,000 and you're asking the seller to give you $10,000 back in seller contributions, you're now purchasing that home for $310,000, which means that that home needs to appraise for $310,000 because the lender wants to see that it's at least worth that amount of money in order for them to be able to finance you purchasing that home. So you can increase, the purchase price if you want and have the seller give that back to you, but the lender's still going to require that whatever you increase the purchase price to, the house still needs to appraise for that much. So if the house was already appraised at the max, or if the house is already priced at the max of 300,000, or if the max is 305 and you go up to 310, that house won't appraise for 310 if it's already maxed out at the 305, which means that you might not be able to get that extra money that you need. So just something that you're going to want to keep in mind as well when it comes to down payment assistance and everything. So why I highly encourage seller contributions. So for one, we'll go with our scenario here, 300,000. 5% down payment assistance. So 5% of that 300,000 gives you that $15,000. So your down payment, which is 3.5% for an FHA loan, 3.5% of that $300,000 is going to be $10,500. Now, down payment assistance. So you had $15,000 to start. $10,500 is going toward your down payment because that's going to fulfill the 3.5% requirement for an FHA loan. That leaves you with $4,500 that you can put toward closing costs, right? Not quite. So you do have 4,500 left over, but remember we mentioned that there were broker fees. And with those broker fees, those can range anywhere from 4,500 to 7,500. It could be a little bit higher than that depending upon the broker and what they charge in a broker fee, but typically it's going to range between $4,500 and $7,500. $4,500 on the low end if it's just 1.5% of the purchase price. Now, if you've got $4,500 on the low end, that means at a minimum, all of the remaining down payment assistance money that you have is getting eaten up in broker fees. The rest of that's just going to the lender, which means that now you're still stuck paying all of your closing costs, which are the attorney fees, the title fees, all of the rest of the stuff that is included in your closing costs. You're still having to pay all of that. So if your closing cost, because you don't have any down payment assistance left, if your closing costs are $9,000, well, now you're stuck paying the entire $9,000 that's remaining. So again, this is one of the reasons why I highly encourage getting seller contributions when it comes to purchasing a home. A lot of people view down payment assistance as, oh, I'm gonna just get down payment assistance and that's gonna cover the cost of me purchasing a home, or I'm gonna walk away only having to, cover a little bit of amount of money in order to get this home. That is not the case. Oftentimes, as you can see, if you didn't do the 5% option, you only did the 3.5% option. That means you would have had the down payment taken care of. But then on top of that $9,000, and I'll bring the screen back up so you can see it. If you had not done the 5% option, if you had only done the 3.5% option up here, that means that you would have only gotten $10,500 to cover the down payment. But this broker fee still would have been in this range, and even at $4,500, you add that to this $9,000, that's $13,500 that you still have to come to the closing table with just to purchase this home. That's a lot of money. So you really want to, again, get as much as you can in down payment assistance, particularly if this down payment assistance has no interest rate associated with it or a very small interest rate associated with it, or if it's a grant, meaning you don't even have to pay it back. You have forgivable down payment assistances out there as well, but that can really save you, again, having coming to the closing table with $9,000 instead of $13,500. But even still, you might not have $9,000 left. And if you don't have $9,000 to be able to cover the cost of purchasing this home, that's when it's really going to be advantageous for you to then go to the seller when you're negotiating the contract up front. This is something you're going to want to do before you officially get under contract. While you're still in the negotiation phase, negotiate for that seller to contribute $9,000 to closing costs. And maybe that seller says, okay, you know what? I'm only willing to contribute $4,000 to closing costs, but you know it's going to cost you about $9,000 to cover the rest of the closing costs. So you say, okay, $4,000 that he'll contribute in closing costs, or she'll contribute in closing costs. So now you can go back to the seller and negotiate, okay, you contribute $4,000 in closing costs. I'll purchase the home for $5,000 more. And now you can give me $9,000 in closing costs. So the seller still nets the same amount because you're paying more for the home. The seller's going to net the same amount, but now they can give you the whole $9,000 because you're going to pay an extra $5,000 for the house, and they were already willing to contribute the $4,000. So these are just some ways that can really help you in terms of being able to purchase a home, especially in today's market where there are increased purchasing prices and a lot of people are really feeling the pain of the upfront costs that you have. There are options out there to help you with down payment assistance, with closing costs, and with seller contributions as well. So that's what I have for you this evening, keeping this to 30 minutes or less, and we're 25 past the hour now, so I'm just under it. But thank you for taking the time to tune in. I'm going to be here every Tuesday giving you mortgage tips that are going to save you tens of thousands of dollars on your mortgage and really help you connect the dots between where you are now and that dream home that you're trying to purchase. So thank you for taking the time to tune in. Take care, be blessed, and we'll see you.